All right, I'm going to jump into this thing. I have a few things I want to cover today. I'm going to teach you guys something. Many of you, few of you at least, run the factors report and kind of understand the decision points that are available as you are prepping for an upcoming year, upcoming budget. And I just want to share that. Joe mentioned something last week about this too. Have you guys heard those? Who's ever heard that story where like you had a professor in college or somebody that did the whole metaphor of putting the big rocks in the jar? You ever seen anyone do that where where they have like a bunch of big rocks and then they have pebbles and then they have sand and then they have two beers? You guys ever see that? And then they put the big rocks in the jar first and they pour the pebbles in and they kind of shake the jar, filling in that space. And then they pour the sand in and they fill up every square inch of that space. And then they can still take two beers and pour the two beers in there because the saying is like there's always room for beer, right? So the thought process here in that metaphor is like putting the first things first, kind of components in life or in business or whatever there is. So as I talk today, I want to talk about the big rocks. Like, what are the big rocks we have to put in place so that the other stuff can fill in the blanks as we're doing that? And Joe mentioned something about this last week, so I'm picking up on that. I just lay down for also where you guys are at the end of the year, you're doing end of year routines, and one of those routines must be budgeting for 2025. You have to be looking ahead at the next 12 months, your financial projections, where we talked about sales projections last week, but also these future decisions you're about to make so you can navigate through a 12-month period, knowing when there's opportunity or needs to pivot, opportunities to add somebody, to make a change, to fill in a priority that you have, or pivot. Things aren't working the same. You're not, the revenue projected isn't working out. What needs to change? How do we make that difference? Also to give you those sales objectives so that you have targets to hit on a quarter by quarter basis or month by month basis to keep your team going. So this is just such a great guide. To be honest, a lot of the stuff I do as CFO of large companies is to set things straight for them so that they have like a compass, like you get a sense of what true north is. And as that's guiding you and you get off course, you have a sense of what needs to correct to make that get back on course. But also the amount of it's kind of strange. I often use the word personal sabotage. Like we often sabotage ourselves as business owners. We give up way too much. Over piece by piece, we compromise for our clients, we compromise for our employees, we compromise for expenses, we compromise for our ego, we compromise a lot. And the thing we're really sabotaging is our future. That future will never happen unless we dedicate time, effort, and priorities to it. And we have to have a sense of what that future is so that we can aim for it. And then we can, in this case, we're going to talk about money today, but like scoop in those dollars and finance that future. We can't do it all in 1 year, but we can make progress towards it year over year. And so today I'm going to teach you the routine of that, like what it's like to reset, look at a year ahead, look at a canvas that you can kind of fill in and start navigating those choices and thinking it through. So that's what we're going to cover today. Before we get started, I just want to once again mention that we have these groups called Confab groups. Phil, you've been in Confab group. Nico, you're in every Confab group. I see Nico 3 times a week, I swear. Jed, you were one for a while. These groups are really great to, one, get to know other people in community, which is awesome just to have some, rapport with people that are in the same position as you, a creative business owner, navigating these choices, thinking things through, getting a sense of what's normal in the industry. But we also do these in 10-week clusters. So about once a quarter, we launch a new set of groups, and that allows us to reset the group, let people add to a group or jump off of a group if the time isn't right for them anymore, and also just reset what we're teaching. This next quarter, so starting in January, we're going to focus a lot on sales. I want to help people put a good, strong sales routine in place for 2025. Joe is going to meet on Thursday mornings at 8 o'clock Pacific. So that'd be 11 a.m. Eastern time. And he's going to talk about the sales process, the hows, the whens, the what to says, that kind of stuff. You guys are going to be reading books and just kind of like getting into that routine so you're comfortable in it. Um, and I'm going to follow up with that just 1 hour later. By the way, you can do both groups or you can just choose one or the other. And mine is going to be actually the work product. Like we're going to work together. And I think you've probably, if you heard me last week, I'll tell the same kind of joke again, but like it almost might be quiet for 10 minutes at a time because we're all writing our next sales email. Like it's actually going to be workload based, moving the chains down the field and landing these projects. So we'll use your CRM or get you hooked on a CRM, start talking about the top 6, which is how we kind of navigate through our top leads on a week by week basis, show you how to make progress and track that progress and really focus down to the core people you need to be hitting and strategizing to get there and then landing those leads for real in that first quarter of the year. So my hope is that this first quarter would really establish you for what these financial goals are going to be. So I'm glad you're part of the conversation today, because if we can get a factors report done for you, so we get a budget and revenue stream for you, we'll have some targets to hit in Q1 when we launch the Confab groups. If you're interested in Confab, you can just hit me up on community, write me an email, tim@revthink.com. My assistant will grab those emails, forward off to you guys. You guys get information about it. We'll also be publishing it on social media and community as well. So my encouragement is be part of these groups. They're really great. It's great to process together and hold each other accountable in this way. Okay, great. Let's jump into our topic today a little bit. Okay, so as mentioned before, we're going to talk about the big rocks, those big things that have to kind of fill in that jar. By the way, I'm solo today. So one of the things I don't like is to hear my voice constantly for 30 straight minutes. So I expect that some of you raise your hand, jump in here, give me examples, whatever you need to, ask questions. So I'm leaving the screens on and keeping you guys on there. As all of a sudden now Phil just turns off his screen. Watch this. No, I'm just kidding. But feel free to jump in, raise your hand, or just start talking. We can kind of work on this together. It's good to see you, Matt. Good to see you, Nico. Okay, so one of the big pieces that we want to talk about really is life. One thing that we exist for at RevThink is for the concept of business, life, and career. And we really focus on helping you as a business owner thrive in those 3 areas. Your business is a part of your career, and your career is part of your life. But we have to be focusing on the life and life issues for real. Sadly, I know way too many people that are divorced or have been divorced or on the edge of divorce in this industry. And because one of the reasons is like that this industry by itself is very demanding, but business ownership is also very, very demanding. And the kids issues, the family issues, the spouse issues, and that kind of stuff are things that often are put aside because we're desperately trying to deliver the next project, or we need to get the next $50,000 project in house, or you have 7 people at the office that are asking something from you, and only one person at home asking it for you, and we often let go of those 1 or 2 demands because they love us. We're dedicated for life, right? So it's such a long-term relationship. I can make short-term problems long-term problems with my household, and then deal with the short-term problems at work, but they stack up over time and they create a lot of chaos for us. We don't love failure. So then when those issues pop up, we don't address them. We don't deal with them very well. And, there's probably an enrichment of being loved at work, being respected for the work that you're doing. It's very external. The industry gives you trophies when you do the work at, your work really well. You don't really win trophies at home. And that big rock of life, those big life rocks don't really fill in. We don't put those into the jar first. When we avoid that, we really don't really have an anchor for the decisions we're going to make. Also on a day by day, week by week, month by month basis, because we're missing that kind of navigating tool of the things of life we thought we'd achieve. So number one thing we have to do is put those life rocks in place, right? If we were looking at that if you're thinking about that as a revenue-based issue or a budget-based issue, what would that look like? How would you know if you've prioritized life when you're doing your 2025 budget? I know that they seem really far apart, But one of the things you're going to recognize, and you might already have done this to yourself, is you've compromised how much money you're going to make next year. So you might be looking down an employee roster, salaries that they're making. The first thing that you've decided to do is to only pay yourself one salary instead of two. And that might sound kind of funny, but you deserve two salaries because you're doing two jobs. One is your day job. That might be a producer, a
Tell me
sales.
more about two.
Yeah, a creative director, right? We give ourselves a job. We show up to work every day. We do a job. We're operations manager, whatever that job is. And then the second job we do is the owner, right? Investors, if anybody came along and invested money in your company, you would prioritize giving them money before you took money home because the investor needs their money. Well, guess who your investor is? It's you. So there's a second paycheck that every one of you deserve, which is this founder money. It's the investor money, and it's a second paycheck. So most likely, many of us, Jen, you might just be smiling or telling me, prompting me, but like we have often held back on what that second paycheck is. And we said, listen, I feel so blessed to be a creative director in this industry or strategist in this industry. I just feel so lucky to have that job. It's okay if I only make money doing that. And then the next analysis is, and we often say is, and it's okay if I don't even get paid as much as other people making that in our industry, even though more likely than not, you're one of the top echelon because you can run a whole business and be respected in that field, where employees doing that for somebody else don't even have that life experience. So where you deserve more than other people in the field, you're probably paying yourself less and you're only paying yourself twice. So what that is already telling you is that you're prioritizing other people's life in front of your life. And I'm not saying that other people can't be a priority, but honestly, if you don't put your oxygen mask on first, then you can't help the person next to you. And if you can't show up to work because you're pushing the limits at home, and you can't afford your life issues and your life balance, and you're compromising for someone else, you're very short run in your business. And all these people that you care about, all these employees you care about, you're sabotaging their future as well. So we got to at least create that understanding that these life rocks, they have to be financed as part of our budget. One thing I would do right now is honestly understand if I'm going to fill out this budget for you, and I'm going to show you in a minute how to do this with a worksheet. But if I'm going to fill out this light thing for you, the first line I'm going to put on all of my budgets is a going market rate for the job that you're doing. So most likely all of you should have at least $125,000 for that job. Some of you should have $250,000 for your job, and some of you deserve over $400,000 for the job you're doing. And that might sound outrageous, but those are going rates in our industry for certain positions and opportunities that people create and what other people get paid in our industry based off of the workload and market that you're in. So don't be afraid of putting that out there and recognizing that is a minimum expense that you need to put out there. It might be a raise, but great. This is going to determine our revenue goals. So we want to understand what we need to hit in revenue to keep this thing going. And we're going to put those rocks in there first. So I'm gonna share. Maybe I should have showed you this from the beginning, but I'm gonna share with you with my screen here. I'm gonna do the easy version of it here. We have this worksheet that we do called Bulletproofing Profits, and which basically allows us to look at these decisions in exactly this way. So the first thing I'm dealing with here is owner's pay. You can see here, and this is kind of the first big rock we're putting in there. And this is the payment for somebody to be the business owner. So in this case, this $1 million company that we have here, for example, $50,000 is going into the ownership distribution category, what the person gets paid there. And then we have this other category down here called direct expenses. Let me just back up a little bit here because I know a few of you maybe you've never seen this before. With the factors method, we have big picture thinking. We divide our expenses into two major categories: indirect expenses and direct expenses. The easy way to think of this is a direct expense are expenses directly related to getting a project done. Indirect expenses would be indirectly related to get a project done. So things like taxes, rent, overhead staff, some operating expenses, marketing, and so on. Those aren't showing up on your production budgets when you're sending something to a client or discussing that. But the revenue you've been given from the client some of that has to go to pay for and cover these indirect areas. So what we're doing here as a worksheet is looking at a total revenue for the business and then understanding if these costs have to be covered, right? As the kind of a first things first. And then we also have to cover the cost to get the project done. There's a split of the revenue. We're basically looking at the total costs related to getting this project done. And in this case, the total cost for this company is about $359,000 in indirect, or 35% of the total budget, 36% of the total budget. And in this case, these direct expenses are another $300,000 that the company spends annually to get those projects done, or 30% of the budget. So we really have this 36% goes to the indirect categories, 30% goes to direct categories, which leaves us a 34% margin. This margin is another kind of like life goal kind of areas of like where we're going to spend this margin. So one thing you can do is decide to take all of that home, right? But many of us, this is where we can actually start developing a return on investment for our business. We can reinvest this money back in the business or move it on to other expenses. So one of the first places we like to create is a cash reserve. So you don't need a bank in the future. You don't need a line of credit future. You're going to have your own bank line right here, but also your charities, capital investments, and so on is where you can spend this money. You can actually spend this money in other areas besides yourself, because if we wanted to take home more money, we'd actually come up here to owner's pay and say, wait a second, if I'm going to make $300,000 in profit, and I want more of that, I want to make this $150,000. I can do it here instead of down here. And I'm going to show this to you because this is where this idea of prioritizing your decisions show up. If you leave it down here, what happens is this feels like it's leftover money. Hey, I've covered this expense and I covered this expense, and with the leftovers, I'll pay myself. When you put the mentality of moving that $100,000 up here, it feels like an expense. It feels like I must pay this money to run the business well. It's not leftover, discretionary, or go to some other goal, because it covers the expenses here. So when I moved that 100,000 away to up there, I created a $100,000 deficit. So I need to make this 300,000, 200,000. And you can see that I'm already making a decision by doing that one simple task, thinking about the number one priority, which is paying myself first and paying myself well, what I deserve. I have this $1 million business, and I've decided that, hey, I, as a business owner, deserve 15% return on my business. I'll pay myself $150,000, 15%. And I took it away from other possible priorities. No, that might not, I might want to have cash reserve be a big priority and I have to take it out of something else. But all of a sudden you can see by making that one decision, my other decisions kind of trickle down. Phil, go ahead.
Yes, well, if you take that money into your personal account instead of the business account, you pay a tax. But if you're going to invest it in the bank account of the business, it's going to make more profits in the end. And if you
Yeah, it's
take it.
possible. So one of the things that you're saying is like, hey, when you take a personal distribution, it depends on what country you're in and how the tax structure works. And even it depends on state by state, because besides the federal tax, there's a state tax. And so there can be a tax strategy around doing this, as Phil's pointing out, instead of a personal like finance strategy. But one of the things you can take out as a business owner is a salary, and that salary is taxed as payroll. Payroll often is a higher tax bracket. So if you're paying yourself $150,000, $200,000 a year, you might be in the 35, 40% tax bracket. So the higher end of that. So every dollar you take on as salary is going to be taxed at a higher rate. Where when it comes to distributions as an owner, that's taxed at a lower category. So in the United States, one of the practices is pay yourself a normal salary rate, and then everything left over, take out as distributions, and you can save yourself in the tax bracket in distributions. That's the first one. Another is you don't leave it in there. You can leave it in the corporation, and the corporation pays the tax. So if the corporation makes profit, the corporation pays a tax against that. So there are some CPAs that would work with you to say, hey, if the business keeps the tax, if the business is keeping the money for its purposes, maybe it's better to keep it in the corporation, let it the corporation pay the tax instead of personally, or take a personal distribution. You should talk to your accounting person, understand what best strategy works for you and how those numbers stack up. But you're right, Phil. There is a tax kind of implication to whatever this decision making is when you're talking about these distributions. I'm just trying to show right now just how by making decisions, first things first decisions, how it creates a certain opportunity and burden on the production, on expenses as we make these decisions moving forward. And knowing that in this case, hey, this is a place where often we don't pay ourselves first. I wanted to just address it like, hey, life and life priorities should be part of what you're doing. Your future should be part of what you're doing. And the first future you should be thinking about is you and your personal, like, why did you start this business? What were your expectations? What were your family's expectations for their lifestyle? And are you meeting that need by running the business? If not, let's put that burden on here. Let's put that burden in here. I'm going to give you an example. I'm just going to take this $1 million and make this a $500,000 company just so that we can see what happens if I had half the revenue. What would really happen to the company if I did that? So with $500,000, and again, paying myself maybe with 500,000, it's real. Well, I'll deal with that in a second. You can see right now with $500,000, my splits 72% to overhead, 48% to direct costs. I'm obviously losing money. I'm losing $96,000 so far in this. So at $500,000, I can't pay myself this 150. I can only pay myself the 50, and I'm back in balance here, right? So I can kind of balance my expenses just by understanding where the revenue goes. But let's understand, let's say, hey, Tim, I actually need to make 200,000. I'm making a $500,000 a year with my company, and I need to make $200,000. Where would the money come from, right? So, number one thing I would challenge you on is the idea of your revenue projection at 500. We should be looking at sales goals to see if we can't actually change that sales from 500,000 to at least 600,000, and look at your quarterly and your monthly, revenue projections to see if there isn't any small gain, like we talked about last week. Last week we talked about what it really meant to add $83,000 a month to your revenue, and how quickly just small projects and basic decisions can actually start generating more revenue. So we talked about that already last week. I'm not going to cover it again, but you can watch last week's recording and just ask yourself a question. Number one, can I just generate more money? Because it's so much easier to generate more money from our client by raising rates, setting expectations, getting work done, and gaining $100,000 in revenue and keeping the expenses the same, the project expenses the same, gives me new margin. So it's got to be the first question we ask. It's not the easiest, and that's not always yes, and it's not always infinity, but there might be something to be gained by just looking at revenue first. The next thing we have to ask ourselves a question is, if we're looking at these indirect expenses, so these are the company costs, and these direct expenses, which are the creative cost, the cost of getting the project done, where is the bulk of my expenses right now? Where's the biggest part of my investment right now? Well, you can see here that I paid myself as owner, which is great, but I also am expecting 10% profit. So I should point this out right now that when I'm looking at this margin of 70,000, I'm already capturing 10% profit in the company, meaning the company will have some retained margin in there, gives us the opportunity for future distributions or profit sharing or what have you. But I'm making profit and expense here in my budget category. And so one thing I need to recognize is what that profit margin means to me, and how I'm going to use that profit margin to my advantage to grow the business. So one area I have already locked in here, but I can look down here and also just realize what other expenses I might have that might be too high. Right here in the decision-making point, if I'm looking at the expenses that I have, the most basic expenses I have. Um, the way I decide where the expenses are going, if they're right size or not, is I actually don't look at the total dollar amount. I look at the percentage. And one thing I'm looking at when I'm making these decisions are the high percentage, high flexible items. Um, one thing so for example, a high percentage item is right here. Rent is about 7%, but not very flexible. Like I can really only make the choice of rent maybe once every 2 years or 3 years, based off what my agreement is, my contract with my landlord. So it's not a very flexible item, even though it can be a high expense. If I'm going down here, other high percentage items, here's another high percentage item, 8%, a little bit higher than the 7% on rent, and feels very flexible. These are freelancers. Freelancers, you know, by definition, are flexible. I only bring them on when I need them. But to think I can get this to zero would not really be very accurate. So one other item I'm looking at here is production staff, and this is what my staff is to get the projects done, about 17%. And this is actually not as flexible as freelancer, but has some flexibility in it. One way to think of it is if this company went from 600,000 to 400,000, most likely some of the staff members won't be that busy. So by having that knowledge, you recognize, well, my production staff or my direct costs that are dedicated to staff. If my revenue goes up, I'll probably hire more. If my revenue goes down, I'll probably hire less. That's a flexible item. So one thing that we can think about when we're building these budgets out is right sizing the team to match that revenue as it grows or shrinks as well. So here we're going to see like these direct costs have a lot more flexibility and often some higher percentages. We should know those are our targets. Where these items here, we might not have it perfectly aligned with what our needs are, but we can kind of look at these and see where the big expenses are. And maybe make long-term decisions to add or subtract in the indirect side. Okay, so let's go back to like this is the worksheet I'm kind of a reference of when we're thinking about these life priorities, where we're going to put them and how to measure them. If we're focusing on them correctly, we're going to be able to see that focus and these percentages here. I think one of us, the big takeaway here, that if this is 8% the owners pay and we feel a little bit guilty, we should recognize that. Why do we feel guilty? Should it really be, is it appropriate to spend that kind of money and take that kind of money as a distribution on the revenue generating? Those are things that we need to process and be able to say to ourselves, yes, that's what it takes. That's what the payments need to be. That's what it takes to build your lifestyle. Let's put those rocks in the jar first and have those determine what else we need to do as a company to build this stuff out. Okay, so that's the kind of big picture thinking right now. As we're also kind of going through this idea of bulletproofing profits, the next thing we kind of have to think about, that let's say call it the next level, the smaller rocks we kind of have to put in the jar for priorities. Once we recognize our life and life issues, the things we're going to see here are who our staff is, the makeup of our staff. So what I mean by that is the people that we hire to come alongside us to help us get the projects done. We often are doing that in a reactionary way. We're thinking of like, well, okay, the client is asking for, or I get a lot of projects that require editorial. I should probably just bring on an editor because I could really easily keep that person busy. So we get a lot of projects that way. We bring on this editor, and now all of a sudden you have to keep that editor busy. And you might be a live action company or a graphic design company, but all of a sudden now you're selling editorial almost in every project because you've hired somebody to get it done. And keep in mind, the reason you brought them on is your clients determined they were the ones that were giving the money to do it. And you thought, I'll react to what my clients are asking me to do and bring on that person or bring on that department to meet their needs. Some of us have a very clear vision and that matches our needs. Great. Editorial department, perfectly aligned with how I want to grow my production company, the type of services I want to give, my vision for the kind of work we're doing. I'm so excited to sell editorial. And others of us, if we brought on editorial team or a graphics team or live action team, one of these kind of bigger pieces, we realize, uh, I'm doing it in a reactionary way, and I'm doing it because the market is asking me to do it, but I don't really have a clear vision of how those pieces come together. So the next pebbles in our jar, who's the team, and how do we understand if our team is right sized and the right people to keep this machine going? You'll see here in the bulletproofing profits or in the factors report that we do, as we look down this stuff, all of these decisions are showing up here in this categories here. So we have teams broken up in two major kind of expenses here. We have staff or, on payrolled people that we hire and bring on, and we have a monthly or bi-weekly burn rate to keep them on board and pay them, as well as the tax burden and retirement fees and whatever to kind of keep that production team going. So this is the first one, the long-term thinking. And then we have these short-term freelancers. Freelancers are obviously on a project by project basis. They often invoice them. We pay them a higher day rate, but we're not responsible for their taxes and benefits and so on. So supposedly balances out the freedom we have, the flexibility we have to use them, and then the lack of burden of the kind of constant every other week burn rate to pay them, as well as not have the benefits and so on, balance ourselves out. So to understand what we're doing here, staff and freelance is one of the first places we can look at of like, how do we understand who our team is and how they stack up? One thing that you're going to want to assess as you're thinking what your team is, one is, do they already have a higher expense rate than anyone else? One thing that we can point out at RevThink, a question we often get when someone first engages us or books a half-hour call with us, I swear, like there are three big questions that people ask us. One of the big three is, hey, should I bring on more staff people? I feel like I'm spending so much money on freelancers. And we have to have a really quick way to assess, hey, I don't know how many people do you have on staff? And then what is the staff makeup? And then who are you hiring as freelancers? One quick way of assessing that is just being able to look at the number of people that you have on staff, the total number of people. One thing that we like to do as just a rule of thumb at RevThink is to say, if you take the number of people that you have on staff and divide your total revenue by that, then you have a revenue per person basis. So let's just say in this case, the production staff was 2. And the 2 people made $50,000 each. So that's where the $100,000 came from. If I took 600,000 revenue, divided it by 2, I'd have 300,000 per person. This is good, easy. This is 5th grade math. So this is easier to explain, right? So at $300,000 of people revenue from our assessment, our very basic, not very strategically thought out yet assessment is that's a very high revenue per person ratio within our industry. We like to see that fall between 200,000 and 300,000. So if someone came to me, asked me a question in a 30-minute conversation, should I hire more staff? And I found out they had 300,000 per person in staff, I'd say, yeah, you have room to hire more staff. You can probably add one more person and get that down to $200,000 in revenue per person. Go for it. If they're at 200,000, so let's say this company had 3 people instead of 2 people at 600,000, I'd say, no, at 200,000, you're probably at the right size. Use more freelance. So that's just a simple rule of thumb that I could talk about in an elevator if I had to. But in this case, in this company's case, with 2 employees, 300,000 in revenue per employee, I actually have an opportunity to hire somebody. Who is my current staff? How am I using them? And where's my company going to go? One of the most common issues that people bring on is they hire people like them. So I can't tell me how many creative companies I walk into that have 3 creative people on staff, no one in production and no one in sales. And I like to joke, it's like building a house with 3 plumbers, right? Nobody know, there's not a carpenter to build the walls. There's no mason to put in the foundation. We have 3 plumbers waiting for a bunch of freelancers to show up to do everything else so we can put our plumbing in the wall. Companies make that same decision because they're thinking, oh, well, the most common freelancer I hire is someone that is a graphic designer or someone to do editorial. So that must be what my need is. But when you're building out your future company, you actually need those 3 kind of big pieces of your production company to create that machine, that a flywheel effect for your machine. And you want to invest enough into creative production and sales so they can play off each other. Sales generates work for production. Production analyzes that work and those the opportunities to determine what creative resources we need by making great creative work, great new opportunities for sales, and those 3 things could work together. So one thing we can look at in 2025 building our budget is what's our creative team look like? What's our big team look like? And should we be investing any new margin into a different area of growth? Not another growth category necessarily in creative, but how do we get new team members that create new capabilities and give us more security? So production, sales, and production, sales, and creative should be the first 3 legs of that stool that you're building. If you have those covered, then you might want to go thinking about some financial bring on some financial team members. That's either a bookkeeper or a controller or a CFO. Again, one of the things people often use me for or Jason for is fractional CFOing outside. We know other firms that do some outside fractional CFO just to help build some financial strategy as revenues coming in and looking at cash flow and opportunities as we're building things that way. Okay, so we have the big life issues. Pay yourself first. Number 1, get the right people on the team. Put the team members in the right position so they're playing the right position, getting the work done, and focusing on growth and growth strategy. When I'm thinking about bringing on staff people, I don't want to just understand the impact of these direct expenses. I want to be thinking of who I can bring on to generate more revenue, right? If I'm gonna go from $300,000 per person to $200,000 per person by adding a new member of my team, I need to create more revenue so I can bring on more team members in the future. So that person I bring on, if they're in production or sales, automatically could be revenue generators just because of the experience they have, the relationships they have, the clients that they know can bring in that project. Production can make me more profitable and find more angles, help me bid out projects at the right rates so that we're actually, and help me winning those projects at right rates so we're getting more revenues for the same work that we're doing. So those are 2 payoffs. If you go to the creative side and you're hiring a creative person, you might be looking at another creative director or an art director, someone to help you get into pitches, win pitches, or run projects more efficiently. Those kind of staff members are what we're looking at. And then, of course, then you get into your graphic designers, editors, and so on, the more commoditized work product that you can find efficiencies as you build out your team. So that's the kind of second level here. I'll cover one more level here, and then I'm going to show you what it looks like as a company gets bigger than $1 million or so. And I'll have this example here of someone at 5 million. So life and life issues first, staff second, so third. The third priority that I want everyone to kind of focus on is they're building out the 2025 budgets is this right idea here, marketing and travel. So many of us desire to get new projects, to find new clients, and we want it to come from what I call wallpaper. Like I just did something, I posted it on my website, it looks so pretty. That wallpaper should just drive in new traffic. I think that we have a reference out in the world of like realtors' offices when you're like walking down the street in Manhattan and they have all those pictures of I swear we do this anywhere. No matter what city we're in, we're always like walk by a realtor and we're like, what kind of houses are available here? And they have all the homes, are really pretty homes up there. And it makes you want to buy a home. I think we have that same expectation when we're selling our goods of like, if we just hang the photos on our website, people that were just walking by our website just happen to be, there's, oh, wow, look at that. Oh, they did that work. In reality, like we need to amplify that work product and position that work product into the minds of our buyers so they know who we are and the work that we've done. One thing that we like to talk about at RevThink is the work of marketing is different than work of sales. And Phil has heard this joke a million times. So I'm sorry, Phil. But we say like we know they're different because they're spelled different. Marketing and sales are different things. They're totally different things. What marketing needs to do is move your clients from unaware to aware. Now, some of them might be totally unaware that you exist. So awareness of this, that your brand is there, is the awareness that you need to do with marketing. But some of them know you exist. They just didn't know you did that project. So that could be awareness too, or that person works there now, or you just brought on that member, or you worked with that client. Wow. Okay. So there's a promotion is also with existing people, existing clients, people that know your name and would possibly go by your website and see what's going on. But we have to get them past that website and get them awareness. So marketing going from unaware to aware has a marketing strategy and a marketing need. Many of us know this because we help people with their marketing materials, but we're just not part of the strategic conversation of what it's like to get people unaware of what we're doing, from unaware to aware. So that's a good investment. One easy way to capture that is to show up, be face to face, and have the person ask you, "What are you up to?" And you say, "Oh, I just finished this project. Oh my gosh, how was that? It was really great. We loved this. We didn't love that." And that conversation you're having creates an awareness, an understanding, and then a connected relationship. When you're showing up and doing marketing face to face, having these meals, doing that travel, you're actually moving from marketing into sales, because sales is moving from somebody that has interest. So they have a curiosity. What are you up to intent. Oh, wow, I'd love to work with you for that. Are you available to do that stuff? So marketing, unaware to aware, sales from interest to intent. When you show up somewhere, you can often move from point A to point Z completely in one meeting or a couple meetings face to face. Another great reason to travel and get out there is because you're in the city, people will talk to you. They feel like there's a rare opportunity to see you, they'll be open to that conversation. If you just hit them up and say, "Do you have a chance to get on Zoom? Can you read this email?" That's always there. It's not very special, not really touch base. So the third thing I want you to kind of focus on next year is this: marketing, marketing, marketing. Have some clarity. I don't just mean update your website and pay 50 grand for a website. I mean, have some understanding of who you are, what the position is that you play, get your voice out there, make some investments in marketing channels, maybe with a salesperson, a PR person, and marketing person, write something, spend some time, by hiring this person down here, this new staff person here, maybe that person has that skill, or by the skill that they bring on, I now have the time available to do this myself. That's that strategic thinking of like, if I'm gonna grow forward, how do I do that? Okay, so those are the three big pieces I kind of want you to look at as you build out your 2025 budget. I don't want you to compromise those. I actually wanted you to do that first. So to begin with, this is a worksheet totally available to you. If I'm going to post this right here in this chat, find it. There it is. If you want to take a look at that, you just hit this button here, give us your name and email, and then we'll give you the link. It'll take you directly to this sheet here. It would already be filled in exactly like this, and you can start playing with it yourself. Put in your revenue goals, start filling in the big pictures for yourself. Here's a blank version of it, by the way. This all work. So start putting your revenue here, put in your big rocks. Think of those first, what it takes to do that, and then start filling out at the bottom. Look at what this margin is going to be. So this one that's filled out. Down here, you're going to understand a margin. This $70,000 on this worksheet is still available. I can invest this $70,000 somewhere. As I told you, I think I'm just going to actually put that $70,000 in the new one more person at my company. And that's going to help me generate for my 2026. I'm going to be at $1.2 million because I hired the right person. Oh, is that right, Phil? Let me see if I need to do something here. There we go. Sorry about that. Give that a shot now, Phil. See if that worked. Thanks for telling me that, by the way. Okay. So Phil, I want you to play with this. Here's the good news. There's nothing you can break that I can't fix. So as you're playing with this, you have a question about something, you can hit me up on community. You can send me an email, tim@revthink.com. You can ask me for a half-hour calls. We do half-hour calls all the time. Doesn't cost you anything. Jason will jump on a call. I'll jump on a call. We'll show you how this stuff works because we want to help you get this stuff in place at your company. So feel free to reach out to us, but have a lot of fun. You can make copies of this, as many copies you want to, try out different scenarios. But see what it feels like, the pressure you're putting on yourself and what those decisions feel like, and start realizing you're going to come to a moment and say, wow, if I do that, I won't be able to, and then fill in the blank. And that's a decision point. And those are exactly the decisions we want you to see. Those are the questions we want to ask. And we want to understand the opportunity because that pressure is now there of where we're going to find that money, find those opportunities and grow. That's what we want. We want a little bit of that pressure early before it actually becomes real pressure. Think about this. We're going to put all the pressure on ourselves in the budget process. How easy is that? If you wait till August when the real pressure is there, we're totally in trouble. And so we want to understand the pressure before it hits reality and we start solving those problems proactively and not really get there. Okay, so this is what we call the Bulletproofing profit sheet. Here's what that looks like for a larger business. Companies that we work with at RevThink about 2 million to 25 million. We all use this form here. It really has the same components as this, but in this one, what we do, we took in the person's P&L and we broke it down to smaller categories. We can often assess that. And we even often look at these staff ratios, revenue per staff and all that kind of stuff right here. It is a really kind of clean version of that worksheet. You can see the direct and indirect costs here, and it starts guiding us to those issues. Maybe I'll zoom in a little bit, see if I can help you kind of see that again. The bulletproofing sheet has the same similar components to it. It just it's kind of easier for you to work with or not. One thing that we're looking at here, we're looking at the direct costs, we're looking at these indirect costs, and we're looking at this margin to see what this margin is here. In this case, the sheet has been filled out all the way until we got to this margin. And right now we have a margin of 218 left in places that we can distribute it. So one place that we can put this margin is just right here in the profit category. And in this case, think about profit as like retained earnings that we can kind of keep within the business. We'd have to pay tax on it, but it stays within the business. This can be put into a cash reserve as well. So sometimes we change this from cash reserve to profit. And I personally like the idea of moving these categories here, especially this one here called calculated loss up here into an expense. Calculated loss for me is a category where I know there are projects I'm going to lose money on because I'm going to pitch this year and I'm expecting not to win at 100%. Or I know I want to have some margin. So if a project's going a certain direction, I want to spend a little bit more money on that to get something done that the client hasn't necessarily agreed to. But I know it would help me win another project. And if I know what that project is or who that client is I have in mind, it's a good solid investment. Or the last one is, the reality is I don't always make hit that on budget category. I need some cushion. So a calculated loss are the losses that come. And if I just made this 100,000 and I put $100,000 in this category, this is a realistic picture that I'm going to take that hit. One thing you're going to recognize here, I'm going to leave this. I want you to watch this indirect percentage change here for a second. When I see right now, my indirect is at 42%. When I put that $100,000 on here, it becomes 47. What this means is like I actually have very little cushion now with that calculated loss. And I personally, as like a CFO for companies, I love to show people that of like, if this is a reality, we're going to have some losses somewhere. Let's not pretend like it doesn't exist. Let's make it a real expense. And basically, we're taking this 4% out of every single project as insurance to cover for the 1 or 2 projects that take that hit, or 5 projects and take that hit. So by grabbing that 4%, I'm not spending it anywhere else. I'm not spending on freelancers, on staff, on myself, whatever. I'm literally taking that stuff away, putting it to the side so that when those hits come, it doesn't break our business. It gives me the cushion that I need to. Now, I don't want to lose, but because there is loss in the work we're doing, it's a realistic cost. And it's not down here in margin. It's up here in calculated loss. So I move it up here. It's like you're actually watching an exercise I do with a lot of clients. Is I have it down here originally, and I move it up here to have the same conversation I'm having with you, which is it's a reality. Let's call it a reality. Now, if we want more profit or more cash reserve, and it can't come from here, where's it going to come from? And then we can start looking through the rest of the expenses, understanding the high percentage, high flexible items. And I'm going to say right now, I already know what the answer is that these cost of goods sold at 35%, it's just too high. I should not be spending 52% in this category. So where am I spending it? Oh, look right here. Contractors, 28%. No way. I'm never going to make my 50-50 margin if I give away 28% to freelancers. I'm already spending too much on freelancers. I'll look over here, revenue per staff. Oh, look at $388,000 per staff member. I should probably looking for more efficiencies down here, maybe hiring another team member down here to cover that. Or maybe I'll add a salesperson here. To this company. Put that salary here. And because I know how to do sales with my team, I'm going to create a burn rate of 125,000, but this person must generate another $1.5 million in income. That's where we're going to get it, because I'm pay somebody 10% of what they want them to generate as a salesperson. So if I give them 125,000, I better get $1 million in return from them, or $83,000 a month, as we covered last week. So now all of a sudden, this $1 million here becomes $2 million. That's got to be my sales projection for next year. Bringing on a salesperson. Look at now, this margin is at 37%, indirect is at 36%. I added a salesperson. There's going to be some changes here, some adjustments to move this back up to 25. I can bring on team members here, and maybe I'll make this 29% and so on. So this is how we often work with production companies on a more complicated basis, understanding growth and growth possibilities, stealing that margin that we have, putting it back into workforce so we're getting more revenue, and then capturing more at the bottom end and creating an upward spiral for our company so they gain in growth. Here I also want to make sure, like, here the owner draws, as I lectured before, they weren't enough. 35,000 is enough for a $3 million company. This needs to be about $85,000 to $125,000 in that category. And I just start right sizing it for them. So as I'm working with my larger clients, I'm kind of doing the same exercise that I want you all to at least try with bulletproofing profits, is picture what the next year can look like. So look, and I know that in the last 12 months, I was only $2 million company, but if I want to hit $3 million next year, where will that money come from? What investments do I need to make? And what am I expecting from it? This is how I do it. Just kind of go around in these circles, kind of look at where the money is, what the margins are, how to prioritize that margin, get a return on that investment, put that return in the revenue, start looking at new priorities, and start filling in the blanks and keeping things right sized. Okay, covered a lot. That was 55 minutes of Tim talking way too much to himself. But you're all taking notes. I was looking at your faces. Courtney, you were the one that kept my attention the most. If you were engaged, I was going to keep on talking. So hopefully it worked for you. Yeah, exactly. I'm like, I must say something good. She wrote it down or whatever. Listen, I'm here to answer questions. So I know I talked a lot. I showed you that stuff. I gave you that tool for the bulletproofing. So feel free to use that. But tell me what you're thinking. Tell me what your questions are. Tell me where you think I'm totally full of BS and there's no way it's going to work for you. What do you got, Phil?
Well, it's just that when you add one salesperson for $125,000 and then you get like 1 million more, it just sounds so easy. It's just like, okay, well, I'm just gonna do it. But then you have to make that person deliver, and also you need to hire more people to fulfill the projects that they're going to bring. So
Yeah.
everything's going to change. But just like delivering the result is like the next challenge, right? So it
Totally.
just sounds so easy when you play with the numbers like that.
No, I had a client this year that we quite literally, it was very difficult for them. There was a lot of issues because it was the right time to hire a salesperson. The salesperson they hired was more qualified than I thought that they should have hired, but we chose to do it anyways because the opportunity was there. The person seemed aggressive and good at their job. We thought they can bring in the $1 million we wanted to, so we put that money there. We put it forward, and immediately that person that was generating that new $1 million realized, wait a second, the production team is not up to snuff. They're not going to be able to get all this work done, and it created some more chaos downstream. The production group had to keep things going, the creative team. So it was like too soon for that big of a growth, right? So that company wasn't ready to capture that revenue and be able to keep up with it. So when I'm doing this factors report, I can almost see that in my mind. Look, I've been looking at these reports for 18 years, right? So I could see these scenarios in mind, and I start right sizing and saying, realistically, we should think about a $500,000 in growth, not $1 million in growth, even if we could hire the person. So maybe it's an outside sales rep instead of an in-house executive producer, something along those lines. Or let's not, like let's recognize that something we want to try in 2026. But another thing I transfer from here, what comes next is cash flow. So this can give me the total numbers, but one of the things you'll recognize with a $125,000 a month person is $10,000 a month in cash burn. And one of the things I need to see is, hey, I'm going to spend 4 months, 3 months, 4 months. And we've built tools literally this year to start measuring, like, what does this house, how many months can I go until I need to start seeing sales generated by this salesperson to know if I'm going to get that return that I'm looking for. So at the 3 month mark, so $30,000 into this experiment, if there's no genuine leads, then most likely there's not going to be genuine leads at 4 months or 5 months either. And at 5 months, if they've gotten zero, I spent 50 grand, I'm not going to get any return on investment from them. So one of the things that we often look at when growing in that way is to say, hey, let's create a 90-day window, right? So it's a $30,000 cash burn. If we're wrong, we only lost 30. We didn't lose 120 or 125. If we're right, then most likely that person had generated about $30,000 to $50,000 in that same 3 month window, which is a good start. But then the next 3 month window, they need to be generating about $100,000 a month. And we could see it. You could see it in the leads that they're generating, the reports that you're giving with CRM, and there's other ways of measuring that kind of return. So as that growth happens, there's ways of kind of measuring out what that investment's like and see if we can get there. If not, it's a total fail fast situation. Try it, recognize it, correct it, constantly correct it. If it's not going to work, that didn't work. It doesn't mean I'm never going to do it, or I'm not. I can even try it another time this year, but right now it's not the right time, right person, and the right method to get something done. And I want to analyze that and fix it as soon as possible. Maybe even with the same person, but just change something about the deal or the work that they're doing or something along those ways. So there's a lot of kind of different ways of organizing that. Yes, EB.
This is a totally maybe separate thing, but I feel like there could be a good uh, topic of conversation in how to hire for sales. Just because I think I'm so like, I just talked to somebody about it who seems great, but I am totally unsure of whether, especially in our world where that's changed so much, as I think I said before, from like traditional commercial reps to now like no one really knows. So
Right.
I think assessing sales talent is really tricky because you're like, well, I don't know, and nor do they maybe like in this kind of world what that actually what they can promise or not promise, but how we can maybe look at, are they the right fit? Do they have the kinds of connections that I want? And also like, are we able to assess how much growth we can withstand? I mean, that'd be a great problem to have, but how much growth we can withstand in the period of time. I know for us, it would have to be pretty like incremental just because what we do is so kind
Sure.
of hands on and we can only take on little bits more at a time. But just like really trying to assess, I think for me has been tough about like, well, even if I were to go get someone, how would I know that they were the right person? So anyway, that's a little,
That's very
sorry
fair.
to it's a little bit separate, but
No, I'll answer the second question first because I won't get into this too much. Good to see you,
yeah.
Jen. Um, I won't get this too much, but I just want you to understand the entrepreneurial formula, right? So the entrepreneurial formula is needs plus resources equals solution. Um, the second question you asked is like, how can I handle that growth? One of the things you have to be assessing as an entrepreneur is what resources do I have available? I can identify a really huge need. If I don't have those resources, it's not for me to solve right now. Or what would it take for me to develop those resources, right? So that second question, what would it take to develop those resources, is this thought process of making something from nothing or having to build something, or in a lot of cases, hiring, right? Hey, should I hire someone? Um, One thing, no matter who you're hiring, it's a salesperson, a creative director, a marketing person, an EP, no matter what thing, you need to know what that person's job is supposed to be. So at RevThink, we often use the term mastery. You have to have a sense of like what sales is supposed to be if you're going to hire a salesperson. So when you hire the person into that, you're giving them the right direction. You have a sense of if they're on track or not, and are they contributing the way they're supposed to contribute. There's a few ways to know that. One could be your previous experience. You were at an agency, you met a lot of salespeople, maybe you were on a sales team or sat in sales meetings, and you absolutely just learned it firsthand, sitting in someone else's meeting while you were getting paid to learn it. But many of us who've started our businesses before we had those life experiences, the only other way to do it is to actually go be the salesperson for a while. So this might sound really strange, but if you're a really great producer, it's easier and better for you to hire a producer to replace you because you know what that job's supposed to be. And then you become the salesperson for a while to understand what sales is supposed to be so that you can hire a salesperson into the vacuum that you made. That's a great strategy for growth. Than to think, I'm a really great producer. I'll stay here with what I need to, and then I will basically abdicate one of the most important jobs, sales, to somebody else. I don't know what they're supposed to do. I hope they do it right. And then, well, they're a lot of money. Well, I can't get what I want to out of them. And we don't really know how to correct it. So we need some sort of outside force to understand and create that vacuum. Um, I know Joe Valentine that works with us steps into a situation because he comes from sales and he can really quickly create a strict routine for sales. So we can snap in the sales meeting, the sales reports, the sales projections, create some benchmarks. So in that case, we're often helping companies correct themselves. I hired this salesperson. I'm not getting what I need to out of them. Help me, right? What do I need to do? And okay, we come in and triage and go like, listen, there's got to be a protocol and they have to follow this and they have to be able to give us those reports and they have to give us a sense of what they're seeing, what tea leaves they're giving us that we can read so we can get some insights and some understanding of that, and then we can give them feedback. So one thing that you can structurally do operationally, put some things in place at a CRM, at a sales meeting, and so on, to get that stuff going. But a lot of you are smaller right now. It's probably better for you to just do sales yourself. And as you're doing it, grab that CRM and start filling out yourself. Add your leads and your understanding and your projections there. See what information that it's asking for and see how that machine works. That way, if you hire a junior assistant to you in the future, they can at least fill out your CRM and maybe they can start doing some of the marketing outreach for you before you fill in the blanks. And you can kind of slowly grow that way. You might only grab 200 or $300,000 in growth in the first year doing a junior person and you doing it, but at least you have a sense of what the job is. And then next year hire that, 80 to $120,000 salesperson that's making 3-4% commission, and then see if you can't generate $1 million to $2 million in sales with them. And then you're back to either production or you're jumping over to operations to figure out how to get all that work done as the jobs are coming in. That's often how growth is happening with companies. That's a good question, though. Thank you.
Well,
Yeah,
I love to see
Go ahead, Phil.
right. Or well, I'd love to see the table you mentioned about the salesperson, or I don't know how you called it, but maybe that could be for another call. Under a dog.
Yeah, we'll show that. It's one of our latest inventions. I'll put that down. Maybe I'll show it to. Oh, I know what I'll do in the Confab group. I'll definitely be using that. The stuff that we're doing in January. We'll use all the kind of tools and assessment stuff we have. So, when that comes about, maybe the same week we bring it out for the Confab group, I can do a weekly briefing and show that as well. Yeah, good question. All right, is that helpful? Do me a favor right now. If you guys want a copy of the bulletproofing stuff, just kind of hit that button. I automatically ask you to make a copy, then you can just make a copy yourself and you can keep it up and running. Excellent. Well, it was great to see you all this week. I'm glad this was helpful. I appreciate you sticking on. I know I try to cover a lot. Sometimes I was kind of putting the pieces together. But again, you can always ask questions, post questions in the community. I'm reading the comments and so on. And when we repost this video, it might be a great place to kind of follow through if anything else and keep the conversation going. I'm available for any anyways. And besides that, I'll see you next week. Next week, I'm going to talk a little bit about cash flow. So how these two things trickle over to some simple cash flow routines. I'll show you that before we finish this year up because I want you to be set up well for 2025. We'll keep this machine going. Great to see you all. Thank you, Stephen. Thank you, Phil.
Thank you.
Courtney, Victor. Great to see you. Bye, everyone.
Bye.